It is the 17th century. Dutch settlers established a defensive wall to protect their New Amsterdam colony from potential attacks. Wall Street was a slave trading marketplace and a securities trading site. As trade flourished around this wall, it became the bustling center of commerce, and its name, Wall Street, stuck. Fast forward to 1792, 24 stockbrokers signed the Buttonwood Agreement, creating the foundation for what would become the New York Stock Exchange. The Buttonwood Agreement was a written compact rumored to have been created under a buttonwood tree. The 19th century saw Wall Street evolve as telegraph lines were laid, revolutionizing communication and propelling the financial industry forward. Visionary figures such as J.P. Morgan and John D. Rockefeller emerged, leaving an indelible mark on the nation's financial landscape. J.P. Morgan created giant trusts and John D. Rockefeller's Standard Oil moved to New York City. The opening of the Erie Canal in the early 19th century meant a huge boom in business for New York City, since it was the only major eastern seaport which had direct access by inland waterways to ports on the Great Lakes. Wall Street became the money capital of America. In 1884, Charles Dow began tracking stocks, initially beginning with 11 stocks, mostly railroads, and looked at average prices for these 11. As we enter the 20th century, Wall Street faced significant changes. The advent of the telephone enabled even faster communication, leading to an unprecedented increase in stock trading activity. The Roaring Twenties brought a period of exuberant prosperity, but it all came crashing down with the infamous stock market crash of 1929.
All through the summer of 1929, there had been ominous rumblings. For months, unemployment had been rising. Automobile sales and department store revenues had fallen off sharply.
The aftermath of the Great Depression resulted in the establishment of regulatory bodies, such as the Securities and Exchange Commission, aimed at restoring investor confidence and preventing future financial calamities. As the world grappled with Wall Street continued to adapt and thrive throughout the latter half of the 20th century. It played a significant role in financing the post-war economic boom and contributed to the emergence of the United States as a global economic superpower. However, it wasn't without its challenges. Computerized trading and electronic exchanges transformed the speed and efficiency of transactions. This era also witnessed the rise of investment banking giants, shaping the face of modern Wall Street. But the turn of the millennium brought both triumphs and tribulations. The dot-com bubble burst, causing a severe market downturn, and the world faced the global financial crisis of 2008.
I think this is the most significant financial crisis in the post-war period.
There are fears the sell-off will continue on Wall Street.
Soaring gas prices falling.
These events had far-reaching consequences, prompting debates on financial reforms and regulation. Wall Street runs for a short 8 blocks in Lower Manhattan and is headquarters of America's financial markets. But Wall Street is far more than a location. It has been adopted as a term to describe all U.S. financial institutions, and U.S. Wall Street stands tall as a symbol of economic prowess and opportunity.